Welcome back. You're watching Big Deal, and we are discussing the key trends emerging in the venture capital industry. And let's focus our attention on exit mechanisms, and especially by the IPOs. Prashanth, a couple of your big company portfolio companies are heading for big bang IPOs very soon. How is the IPO, industry looking? IPO mechanism for exit looking now, and how is the valuation expectation mismatch being handled?
Nisha, there are really strong and favorable conditions towards companies that are building for the digital economy and companies that are also helping this consumer participate in the digital economy. This is really a window that I think is there for the taking for all companies that have now in the last about towards building more frugally, building more profitably. There is a sensitivity in the public markets towards valuations. I think some of the first very early IPOs didn't go so well, but I think entrepreneurs learn very fast, so they now have the right metrics that are some things that we believe will strongly be welcomed in the public markets. Now, there is also a generational sectoral shift of money flow into the public markets, and there is a supply problem. So I think it is up to us, as in the VC industry, to fill this gap of these new age companies that are both profitable and healthily growing at around 20 to 30%. There is a very healthy pre-IPO appetite with family offices and sovereign funds, even outside of the US hedge funds. I think that is going to be a very positive tailwind for the IPO ecosystem. And finally, I think for VCs and what Rajan was talking about, I think both to get more domestic capital and the right type of long-term foreign capital, I think the ability to IPO and demonstrate that in the Indian ecosystem is now complete, as in the virtuous cycle is now complete in terms of being able to not only get great momentum in funding, but also great momentum in exits.
Right. So, Prashanth, I want to counter you on one point. When the startup IPOs first surfaced, markets actually gave them the scarcity premium, and they were big bang IPOs. But after that, the markets, when the investors burned their fingers in some of the investments, that's when the trust deficit creeped in. So right now, probably the learnings have been great. I want to ask you one direct question on one of the companies you back, and it's going to be one of the bigger IPOs for the second half, hopefully. How do you see a duopoly kind of situation in food delivery when there are two listed companies worth billions of dollars?
So, Nisha, I think the market is extremely favorable for companies that have a long-term ability to compound their growth and that have demonstrated a ability to perform quarter after quarter, right? So I think it's not about just what happens when the company IPOs. So we have seen in multiple companies that it's really the long-term performance over 2 to 3 years that investors really value, and that's what our entrepreneurs should also get good at. So it's not about that IPO, or it's not about that pop on the first day. It's about delivering quarter after quarter.
Okay, you have dodged the question of duopoly, Prashanth. Would you like to take it up, or if there is a view on that?
So I think large markets globally have never been a single company or a single winner-take-all market, right? So I think it is favorable for the consumer to have choices, and I think the markets will also value having multiple players and who can deliver customer value and healthily grow.
All right, there'll be interesting times, at least in this sector, that I can promise, Prashanth. We all are, waiting for that to happen. But Rajan, about the exit options, this is about growth stage companies. M&As have been very tepid. On the other hand, there have been portfolio buyouts, secondary exits. Very quickly, exit mechanism, is that enough? What can be done?
Yeah, I think, look, as Prashanth also spoken about, I think in India, for larger successful startups, I think IPO is the right exit path, right? I think we have an extraordinarily vibrant capital market in India. Just to give you a sense of numbers, Nisha, there are 20 venture-funded startups that are public in the Indian exchanges today. Actually, 19 of the 20 are public in the Indian exchanges. One is Freshworks is public in NASDAQ. That have a market cap of over $1 billion, right? So we call it over 8,300 crores. That number, we think, is going to quintuple, or 4-5x growth over the next 5 or 6 years, right? So we think the Indian capital markets today, for profitable. Firstly, you have to be profitable. I mean, there would be some exceptions of companies that will go public that are not profitable, but by and large, most of them will be profitable. Long-term, structurally strong businesses, right? Good brands, consistent growth, predictable growth. We think IPO market is absolutely the right way to go. And what's very interesting and somewhat ironic, Nisha, today is that in the US, if you look at the NASDAQ, right, there's very little IPO activity. But in India, we have this extraordinarily vibrant IPO market. Just within our firm, Peak 15, over the last month, we've had 3 IPOs. We have Ixigo, Office, and GoDigit. And since the pandemic, at Peak 15, we've had 14 IPOs. I mean, this is the new India, right? So, and Prashanth, you just flashed a bunch of companies from the Accel portfolio, similarly from the WaterBridge portfolio. So I think we are in an environment where it just couldn't be more exciting, Nisha, because if you're a strong, profitable company that has consistent execution, that can demonstrate long-term growth, I think the appetite from the Indian equity markets is very, very strong. So I think unlike in the US, where most startups exit through acquisitions, we think at least for the next, call it 5 or 10 years, most of the larger exits will be through IPOs. That being said, there will be, there will be strategic buyouts, if you will, right? So, for instance, in our portfolio, we had a company called PingSafe. It's a cybersecurity company. It got bought for north of 1,000 crores by SentinelOne, right? So we'll see, and you read about sort of the.
So the biggest takeaway, Rajan, definitely is that IPO is the best bet for the VC exits from startups, and the equity markets are doing well. Valuation mismatch needs to be seen, while profit and path to profitability is well understood. I'm completely out of time, gentlemen, but there was lots more to really discuss with you, but we'll take it up next time. Thank you so much for joining us, Rajan, Prashanth, as well as Manish. With that, it's a wrap on Big Deal. Thanks so much for tuning in.